Hello everyone, this is Petko Aleksandrov and today I'm recording from the Wonder Bridges in Bulgaria. This is how they are called. It's really amazing here. You can see these bridges are formed in the rocks. And there is nothing wonder, by the way, they were formed because there is a river under it, and with the years and with the decades, it formed these beautiful formations. Now, as I've said already in my previous videos, I keep traveling while I am trading with the expert advisors, and this gives me the chance to travel around Bulgaria, and hopefully after the COVID crisis I will be traveling again outside of Bulgaria, and I will keep recording very basic videos for the beginner traders. And today's topic that I have selected to talk about is the Forex major pairs. And quite often we receive questions in the forum, in the email, and many of the students are asking which are the currency pairs that you are trading. And as you have noticed in most of my courses, I trade with the major Forex pairs. So which are the major Forex pairs? For Euro dollar, dollar yen, pound dollar, and dollar Swiss. These are the very major currency pairs. Even some traders say that Aussie and New Zealand and dollar CAD are major. Now these three, the Australian dollar versus the American dollar, the New Zealand dollar versus the American dollar, and the American dollar versus the Canadian dollar are known as commodity currency pairs. Why? Because the economies of these countries are very dependent on what they export, and these are different commodities that I'm not going to talk about in this video. But for euro dollar, which is obviously the most traded currency pair, above 20% of all daily transactions on the Forex market are for the euro dollar. And as I have mentioned in some of my courses, the Forex market does about 5 billion of daily transactions, which means that more than 1 billion is just for the euro dollar. Second is the dollar yen, which is accepted by the traders as safe haven currency pair. I have also mentioned that in some of my courses, but for the beginners, this means that when there is some uncertainty on the market, crisis, when there are wars, the investors put their money into yen. So they buy more yen, which makes dollar yen obviously fall. But the yen as a currency is considered to be the safe haven. So when there is any panic on the market, you will see a lot of money going into the yen, and it will rise against most of the currency pairs. The third spot is for the pound dollar, especially after the UK has left the European Union. I believe there will be more volatility because it's not part anymore of the European Union. It's totally separate economic, not that it was not before, but now it's like really separate from Europe. And I think there will be more movements with the pound dollar, the euro pound, and the other currency pairs that are related to the pound. And number 4 in the major Forex pairs is the dollar Swiss. I'm not sure if you know, but the Swiss franc was stick to the euro, like the Bulgarian lev now. We have 1.96 as a constant rate. Okay, so for 1 euro we pay 1.96 of Bulgarian levs, and this is every day for many years now. So why traders trade the major Forex pairs? Why do I trade them as well? Because when there is a lot of volume in one currency pair, it means that there is less spread. Okay, the spread is the difference between the bid and the ask price. This is what the brokers benefit, and this is what we pay when we are buying and selling currencies on the Forex market. So the more volatility there is on a currency pair, the lower spread we pay. And on the other side, the currency pairs that are not within the major forex pairs, these are called to be the exotic currency pairs. They have bigger spread, and for us, the traders, it is more expensive to trade those. And especially when I trade with expert advisors, it is essentially important to trade with small spreads. And as you know, I share a lot of my expert advisors in the courses, and you can't believe how different results the traders are getting. So some traders report to me great results, and others for the same period of time report to me losses trading the very same expert advisors. This is because these guys that are losing are trading with brokers that offer high spread. So trading the major forex pairs is very important because we pay small spread, but you need to look for the broker that will offer you the small spread. And another thing important, the slippage. The more volume we have on the major currency pairs, the less chance we have for slippage. And with very simple words for the beginner traders, what is the slippage? This happens usually during the news, and if you want to trade during the news, normally you will see that your order is executed not at the price where you want, but it could be 10 to 15, 20 pips higher or lower. This is the slippage. Not really a nice feeling, especially if you were in the right direction. Alright, so as a conclusion from this beautiful place, I would like you to take from this video that you really don't need to trade anything different from euro dollar, pound dollar, and dollar yen. And as I show in my courses, I combine, for example, euro yen or pound yen to have equal exposure in my portfolio because I trade with many expert advisors, but don't really go for exotic currency pairs where you might pay a lot of spread and you might have problems with the slippage. Stick to the major currency pairs and you will be doing just fine. Many professional traders are trading just euro dollar and pound dollar and dollar yen, or even just euro dollar. I know many professional algo traders that trade just euro dollar with many expert advisors using EA Studio. They use different strategies, so still they have a nice risk diversification, but they trade euro dollar. Why? Because it's the cheapest currency pair, and this way we make more profits. Thank you guys for watching this video from the Wonder Bridges in Bulgaria. If you have enjoyed it, make sure to like it and subscribe to get more of my free videos while I'm traveling, while I'm trading with expert advisors. Bye!